Rudolf, thank you so much for joining us today. Of course, we've seen vehicle sales tapering off for the month of July, but on a year-on-year basis, still up by around 23%. Just give us an idea of the trends that we're seeing in consumer demand for new vehicles.
Yeah, as you said, the month-on-month figure coming off slightly from June, but these numbers, as we know, are normally quite volatile. Like you also mentioned, the long-term trend still quite strong upwards. I think we saw year-on-year increases of about 18 or 20% thereabout, and the monthly decrease mostly isolated to the passenger vehicle sales, which we saw come off a bit in July. Maybe just the consumer maybe seeing that Reserve Bank rate cut and maybe waiting to see if Bank of Namibia will do the same.
But of course, I mean, you contrast the month-on-month drop there in passenger vehicle sales to commercial vehicle sales, which were up by 20.7% on a month-on-month basis, and on an annual basis up by 45.8%. So strong demand coming through from businesses. If you had to split it between commercial and passenger sales, I mean, how important is a commercial demand for new vehicles?
Yeah, commercial demand at the moment, the strongest driver of growth. And I think that's obvious when you take a look at the drivers, and government obviously being one of the big drivers behind this growth. And they're obviously more in the commercial vehicles category. They're buying commercial vehicles to build buildings, to increase jobs. We saw, especially in the extra heavy commercial vehicles, one particularly truck dealer selling almost 30 vehicles this month, and we suspect that might be a big government tender coming through there.
Sector really helping to boost growth. I mean, to what extent are these businesses also restocking on larger cars that they need to conduct perhaps big infrastructure projects, construction projects?
Yeah, if you just take a look on the ground at the amount of buildings coming up, it's evident that that businesses will need vehicles going forward, and especially with a lot of motor shows the past couple of months and the interest rates being low, I think cars are actually affordable at the moment, and they're definitely making use of this opportunity. We also have seen that businesses are sitting on big cash balances. So that might be also a driver behind this strong growth figures that we're seeing.
See light vehicle sales as a barometer for economic activity. It also gives us an idea of the health of the consumer. When you see consumer demand tapering off for durable goods like vehicle sales, is that a red flag for you?
Yes, that should probably be a red flag, but as I've mentioned, the year-on-year growth figure is still extremely strong in vehicle sales, and I think that just shows you that the consumer is still quite healthy in Namibia. I mean, if you consider that inflation is trending downwards, petrol prices are decreasing. We have had really low interest rates for a long period. If you take a look at it from that point of view, then the consumer should be in a quite healthy situation at the moment, and I think we can definitely see that coming through both in the vehicle sales and in the amount of credit that is extended to buy these vehicles.
Do you think that this kind of better position that the consumers are in right now, their propensity to as you say, still spend, is going to remain for the rest of 2012?
Yeah, I think so. Our inflation forecast is trending down for the rest of the year. I think we might even see another drop in interest rates for the rest or in next week as the MPC meets. So yeah, I think the consumer will still be in a pretty good shape the rest of the year, and I think we might actually see that increasing the probability of a nice positive surprise in the GDP growth. Vehicle sales in particular have had a good correlation with GDP growth in the past. So if we just take this as one indicator, then we might see a positive surprise at the end of the year.
Of course, you talk about that interest rate decision coming next week, and we had strong credit growth numbers coming through from Namibia, and that was seen as a sign that they don't actually need to cut interest rates, even though, you know, South Africa has cut interest rates by 50 basis points. And of course, this another signal that consumers are still in a healthy position right now. So how's the Reserve Bank going to have to weigh up these two factors?
I don't think this will have a big effect. I think the Bank of Namibia will still, or should probably still cut interest rates next week when they meet. The reason being, they'll probably feel some pressure to rather put that extra money in the hands of the consumers rather than put it in the hands of the banks, where we've seen deposit rates of the banks coming off by about 50 points also as the Reserve Bank cut that ratio. Also, I mean, we are seeing decreasing inflation, so there's still room to ease. So why not take the opportunity?
Thank you so much for joining us today, Rufus. Rufus Kushke joining us there from our studios over in Windhoek.